and welcome to ABC Bullion's 360 Monthly Review. My name's Bron Secchi. I'm joined by Nick Fapel, Global General Manager at ABC Bullion. Welcome, Nick.
G'day, Bron.
Well, we finally had the pop in gold. Very delayed, though. We were expecting it to move up, I think, into the election with all of the uncertainty, and now we have post-election uncertainty up until recently, and then now we have the pop. But that was more US dollar driven. I mean, has gold got any underlying, or is it just reactionary at the moment?
Well, I think it's got underlying, the big macro picture is still largely unchanged. It's just a matter of degree. Definitely it's a US dollar related month, really. If you look at it in some kind of review sense, then the dollar index had big moves this month, had sort of 2.6% range. Real interest rates had about a 22 basis point range, and real interest rates slightly went higher, which probably provided some of the initial headwind to gold, but really it was about the dollar recovering. And the thing about the dollar, I'd say, is that it's been really well supported over the last couple of months by very, very long-term sort of trendline action. And even the rally that sort of was undone last week, that made it right to the top, the exact top of the monthly Ichimoku cloud, which we don't often talk about. Right. But it went to the top of that, touched it, straight back down to more or less trendline support. Yeah. The longer term picture, which is favorable to gold, is that a lot of people expect the dollar to weaken, say next year, or maybe earlier than that. But certainly that's the sort of the longer term outlook for gold for the US dollar. Yeah. But it's really got to go below, say, 91.5 in the dollar index, the DXY, to sort of start moving into that weakening phase. At the moment, it's still holding all the right levels, and that's what kind of kept gold a bit capped. And then when the dollar index dropped really sharply last week, that helped gold liberate. Okay.
Coming up into the election, we were sort of debating whether Biden or Trump would be good or bad for gold, and which would be better for gold, because, as you say, the fundamentals are there. I mean, what do you see going forward? There's still obviously a bit of uncertainty in play, but a bit longer maybe for gold under a Biden presidency. Positive?
Positive, but he's not got full control of the upper and lower house. So he can't mandate. He hasn't got the mandate to have really large, deficit spending. Yep. So in that sense, perhaps that's less positive for gold. But he'll still have to do a certain amount of deficit spending. So I think that it's not as sharply delineated as some people might say. Yeah. That the outlook for gold in terms of the dollar, deficit spending, and so on, pretty similar under both outcomes. Yeah.
I suppose the Republicans can't really, with COVID and the impact of that still hitting the economy, they really can't prevaricate too much. And
that's right. There's some sort of stimulus still has to go through. And the other thing is, mentioning COVID is that's still playing out in terms of its impact on the economy, regardless of who is in the White House. Yeah. All right.
With silver, I noticed that it actually popped up a little bit more than gold, and the ratio came down, not massively, I think from 80 down to 77 or something. Yes. But do you think under a Democrat sort of government that silver will get a bit more of a move and we can get that ratio coming back down? I mean, I'm thinking solar, green sort of emphasis on...
Yeah, that's a fair point, actually, that there might be some, a particular sectoral demand that favors silver. That could definitely happen, and that depends, I guess, what kind of policies can be pushed through. Yeah. I think when we talked about the really, really big picture for the gold-silver ratio, I think sort of below 60 was quite a hard call. So I'm not super kind of bullish on the ratio, but you're right, it has done well, and it's gone to, I think, went to 76, 75, and those are the sort of levels we had talked about it, inclining to over the last few weeks. I think it's quite positive that silver has slightly outperformed. I think in terms of targets, I mean, the one thing it kept well clear of the weekly standard line support, so that was good. Had this decent rally. So I think now, 28, 30 and 33 are the sort of targets that are emerging, which I think are realistic given where we've been.
Yeah. The other news this recent, obviously, was the RBA interest rate cut. Yes. I mean, is that a wasted bullet? Because normally when you sort of tighten up the difference between interest rates, so the US and the Aussie interest rates tighten down, you expect the currency to weaken, and the Aussie dollar went up, and it was like...
Well, the US dollar move overwhelmed everything else.
Yeah.
The longer term significance, I suspect, is how this, quantitative easing program plays out.
Right.
I think it's 100 billion Aussie.
Yeah.
That's going to make the RBA a really substantial purchaser of government bond issuance.
Right.
That will probably act to weaken, the Aussie in the longer term. But in the short term, what happens in the US dollar is going to outweigh that.
Yeah.
But perhaps we should try and look through that and see, well, how's this going to play out in 21 rather than,
Do you think the RBA with these cash rate changes, is any power left in those, or is it now more quantitative easing?
I think it's more about quantitative easing, because they've got to almost as good as the zero bound. I mean, I don't think there's any realistic difference between 10 basis points and the zero bound.
Yeah.
So I think that it's where do they go next with QE, or perhaps with sort of changes in terms of how the banks can operate in terms of I guess reserve asset ratios, but they don't want to do anything that interferes with the fundamentally robust banking system.
The RBA's talked constantly about not going negative, but do you think that,
it's inevitable?
Is it inevitable? I mean, are they going to be... They said a lot of things that they wouldn't do. But,
yes, so what else wouldn't they do?
Yeah.
It's still such a sort of a strange or an unfamiliar territory and concept that it's actually really difficult to comment on.
Yeah.
I think that in the end, the Australian economy is still pretty good, and it's about the health also of our major trading partners in Asia Pacific.
Yeah.
If all of that carries on, with decence of demand from our external partners and so on, I kind of feel that sort of extreme, the negative interest rate scenario shouldn't really happen to play. Shouldn't really need to play out exactly.
Yeah. So, what's your sort of short-term take on gold and silver going forward?
Good. My short-term take on gold. The price rallied right up to the daily cloud top.
Yeah.
Daily cloud's been a really big issue for gold for the last month. Got into the cloud, went to the top of it, came back quite quickly. So that's a fairly key resistance around about 1960.
Right.
There hasn't really been any major changes in positioning.
Yep.
For silver, there hasn't been major issues around positioning either, but what we saw in the course of last month was that there was about 25 million ounces or so, or 22 million ounces, I think, of short covering. So when the price went down, shorts took some of that back.
Yeah.
Longs haven't really adjusted their stance. They're as bullish as they were. So and the same for the ETFs. That pretty much flatlined.
Right.
So I'm positive, but the very, very immediate this week, we've reached an important resistance point.
Yep.
Perhaps it sort of moves back down to
consolidate a little.
Consolidate. The key level, if it does go up through 1960, is can it go through 1990, 2000? If it does that, then that's a major, major point.
Yeah, good. Thanks, Nick. Stay in touch with the markets by following us on our social channels or at abcbullion.com. Until next time.
Thank you.